While the real estate market has been in the headlines for how agents get paid and what is going on, we are here to talk about the statistics and what is going on in the market, talking about, active days on market and everything that you need to know as a consumer if you're thinking about buying or selling, or you're just keeping tabs on what's going on. Because we are in, kind of unprecedented times, and it's important for me to know that you know what's going on, but also to know that I know what's going on. So stay tuned. I'm always here to help, and let's dive in. What's up, guys? Jeremy Kane, living in the Denver suburbs and eXp Realty. Super excited here to dive into the market as we do every single month. If you are interested or thinking about getting into the market in the near future, please reach out. You can comment, get in the market, and I can reach out to you and we can have a private conversation, whether you're buying, selling, renting, investing. I'm here to help make a plan and a strategy because it's my goal to help you build wealth through real estate. So let's get into this month's report. The thing that sticks out when you look at this month's report is absolutely the high number of concessions that are going on. And this is 100% in relation to the higher interest rates. The interest rates did spike up a little bit in the previous month. And so when that jumped up, it definitely, caused for concern, right? 57% of closed transactions had a seller concession to the buyer. Now, this could be for a myriad of things, but ultimately that number is usually much lower or has been much lower over the last few years. Even with the higher interest rates, this number keeps ticking up a little bit because I think lenders are coming out with more and more products to help control that. Now, with that said, at the time of this recording, well into August, we have seen the market rally a little bit and the interest rate has come down, so to speak. It's not coming down, to 2-3% like some of us were able to get in the 2020, 2021 run. But definitely any reprieve is absolutely massive. Some areas actually saw 88% of their transactions have concessions. So depending on your price point, what's going on in your zip code and what kind of houses are there, that's absolutely something to keep your eye on. Now, with that said, including these concessions, 37.8% of homes saw price reductions before going under contract. And so as we see this, and I will tell you these statistics are July, right? End of month. July is a really odd month in Denver. I think it's really interesting to see kind of how the seasonality plays out, right? May is rough because there's a lot of distractions. July is rough because people are just soaking in the summer. They're in summer mode. They travel, they camp, they do a lot of stuff outdoors. So those big time weekend, showings and things like that are definitely, limited. So ultimately, what's going on here? Buyers are understanding what their limits are, looking for concessions. Sellers are, really, people that are selling right now have to sell. So it's not something that they can just wait 4 to 6 months to get moved. It's because they've had a life event, they're moving, or they really, really, really want to, change their lifestyle, right? But most of the time it's, we have to move. We're going to unload this. We're going to cash out this investment. We're getting a divorce. We had somebody pass away. All those things, those are absolutely why we're seeing homes come on the market. And I get it. We're still seeing normal homes move, but those life events are really driving these. So the sellers are in a little bit different position. While we're not in a buyer's market, since those people have to move, they are willing to do a little bit more negotiation. So almost 40% saw price reductions and, up to 88% in some areas saw concessions. So that tells me that, the people that want to buy are, knowing their limits and they're coming in educated, which is great, and understanding, that they have an opportunity to get a deal. And the people that have to sell, and they're, willing to adjust that price in order to get something moved. The next stat that really jumps out to me is the fallout rate. 35 to 40% are falling out after contract. So this is at inspection, buyers getting cold feet because of financing, a lot of different things. But when you're talking about 35 to 40% of houses that go under contract are coming back on the market, it's a massive number when you really think about it. So, if you are a consumer out there and you don't get a house on the first time, certainly continue your search and keep moving forward, but understand that that house very likely could boomerang right back on the market. And you could be in a position, depending on how you positioned yourself in negotiations, to, be the one, right? Also, if you're getting into the market, it may be worth looking at some of the pending listings just to kind of see and educate yourself on the market, because those may come back, right? If that perfect spot, if that perfect home in your perfect price range is out there, definitely send it to your agent. Hopefully that's me, and say this one would be perfect. And then we can keep an eye on it. We can make calls to the agent and see if there's any, what's going on, where they're at in the process. But this is absolutely part of our market and part of a strategy, as 35 to 40% are coming back on. A couple other statistics, 5.5 showings per month. This is way down. We, during the crazy pandemic, we were seeing 5.5 showings in half a day, right? 20, 30, 40 showings over opening weekend, especially in certain price points. 5.5 showings across the board, across all price points in a month is absolutely something to take notice of, and 14 showings to go to pending, right? So this doesn't directly correlate to our, days on market, which the median days on market is 13 and the average days on market is 28. But as we know, those statistics are, just a starting point, not a massive representation of what's going on in our market. So what this means is that it's not opening weekend, right? Maybe it's opening weekend plus, maybe it's a month, and a lot of stuff is still stuff that's going on, that's priced right, that's staged right, that is move-in ready, again, because of those high interest rates, is still going, right? But some of the other stuff that maybe needs one or two things, maybe the furnace is super old, or maybe the floors need redone, or maybe it needs paint, those things, if it's just one thing, sometimes will push us back. And then that's when we're sitting, right? Because people are having more options, regardless of where we're at. There are more options on the table. So the buyers that have been conditioned to, okay, if I see one, I got to get it, I got to attack it, I got to go all in with my offer. They're starting to realize that, okay, maybe you do have some time to sit back and realize what's actually going on. Think about it, consider what is going on in your world, and if that is going to be the perfect fit, because the investment is real. So with all that said, you must say, oh, Jeremy, well, the prices must be coming down. Is it time to jump in? Hold that, right? The average sales price was $784,748, kind of a cool number. And that was up 0.4% month over month. And the median sales price was $655,500, and that was down 0.4% month over month. So new listings are down 12% as we get into the school year, as we get out of the summer. Active listings were up. The carryover active listings were up 3.6%. And days on the MLS was up 7%. So we are seeing some inventory kind of stagnate and hang around. We are gaining some ground on inventory. So that is something really to consider as we move forward. Even into August, right? Boots on the ground. We are seeing listings that are priced right, that, maybe are, niche specific, right? I have a horse property right now. I have a, perfect main floor living property right now that's attached and, has no maintenance. So those are kind of niche properties. And so those are kind of sitting around and hanging around, because if you have a niche property, say it's a horse property and it's, well set, then that person can, has their choice of maybe one or two. So we just have to be a little more patient in this, see kind of how it goes, especially the more specific the property entails and the more detailed, right? And so for instance, my conifer property, it's a horse property on 10 acres. It's in the mountains. It has a guest house. It has a shop and a barn. So it has a lot of the things, but that's a specific buyer that wants to spend that money, that wants to live that lifestyle. And so we need to make sure that we're just putting it out there and getting it out there and catching someone's attention. So as we move into August, and as we are in August at the time of this recording, we have a lot of things that are out there, right? We're talking about the Fed rate getting cut. The interest rates are coming down already, celebrating what could happen. We have the commission lawsuit that's going to come into effect, that has come into effect now at time of this recording. And all of these things are really indicators of where people's focus are, right? But not as many people are focused on the consumer, on what's going on in the market. So I do think there will be some opportunity based around this kind of changing in the market and the changing of how we do things. So as a buyer, as a consumer, I want you to look past those headlines and really focus on your situation. As always, I always say this: your situation is unique. If you ask me how the market is while I'm giving you statistics right now, I'm going to say it depends. Why do you ask? And let's have a real conversation about your situation. If you're interested in that, absolutely book a call with me in the link below. I'd be more than happy to go into that with you. Sometimes these are private matters and things like that. So obviously, you don't have to comment below to get in touch with me. Just reach out. You can shoot me a text, 303-210-0378. But overall, I think we are going to see a much more normalized market, much more, normal fall, which we'll see a little bit of a blip before we get into the holidays. And then things will really slow down November, December, as listings, typically people don't want a bunch of people through their houses if they're living in them, and so on. So that could all be thrown off with a massive interest rate improvement. I think we're going to kind of bounce back and forth. I think it's funny now because everyone's like, oh, the Fed this, the Fed that. Well, the markets react 6 weeks ahead of when they're going to drop the rate because everybody knows, and they put the information out and they drip it out or whatever. They have, these meetings that they talk, and everyone knows what's going to happen. So don't expect a massive impact of the Fed rate dropping, supposedly in September, on the market, because they've already celebrated, they've already put that in. So the mortgage interest rate has already celebrated that and improved. So stay with it, stay tuned. Good news here: more inventory, more opportunity, homes still selling, prices staying pretty straight across the board. So all things considered, pretty good considering what this August has in store for it in the headlines. So I hope this helps. Please like, comment, subscribe. We will see you next time on Living in the Denver Suburbs. Keep in mind, I do release a new video every single Thursday on YouTube, and I do go live on Facebook on Wednesday with that content. So hope you have a good one. We'll see you next time. Bye-bye.